or second hour. So here is the case about sell your receivables. Do you have a credit card? 信用卡 Do you have a credit card? No? Maybe you have. If you have a credit card, you can use the credit card to buy anything and don't need to pay the money immediately, right? So, do you know when you go to the net store to buy the courses using credit card, after 1 month, you pay the money to net store or you pay the money to credit card company? Credit card company. Why? You bought the courses in net store. Why you pay the money to credit card company? Why? Because net store sell accounts receivable to the credit card company to the bank like this. So credit card is another way of selling accounts receivable. Okay, so here show you credit card is a form of selling accounts receivable. On slide 100, credit card is another way of selling accounts receivable. Okay? For example, in this case, who are you? Hyuna. Wow, Hyuna went to shopping, okay? And went to next store to buy courses using credit card. So when Hyuna went to next store buying courses using credit card, did Hyuna pay the money? No, which means Hyuna owe money to next store, right? So Hyuna owe the money to next store. How much? For example, $100. So what's the problem? The problem is after 1 month, he'll not pay the money to whom? To next door? No, to credit card company. Why? Quite interesting, quite weird, right? Why is that? Because when he'll not use credit card to buy something, next door sold accounts receivable to credit card company at the same time immediately. Okay, so these kind of things happen at the same time when Hyuna using the credit card didn't pay the money. Hyuna have all the money to next door. At the same time, next door sold accounts receivable to credit card company. So at the same time, next door net sold accounts receivable to credit card company. Okay, so did you find out when you use the credit card, actually it's another way, it's a form of selling accounts receivable. So that's why he'll not pay $100. So customer pay the money to credit card company. Okay. In Taiwan, usually commission 5%. So if you have this kind of experience when you go to buy something, like a next store, they will ask you, you pay the cash or you use the credit card? Sometimes they will give you different kind of price. Cash price, credit card price. Why is that? Because of the commission. If you pay the cash, they will give you a cheaper price because they don't need to pay the commission to the credit card company. Okay? So when they use the credit card, you just recall it like selling accounts receivables. The same. Okay? So here I told you when use the credit card, you just recall it like a cash sales because next door sell accounts receivable immediately at the same time. So you just recall it like a cash sale. So like what? Like you sell accounts receivable. So on slide 104, if this customer, so customer buy something, okay, using credit card. So this credit card, using credit card to buy something. So they didn't pay the money. They owe the money how much? $600. So $600 is accounts receivable $600. Okay, using credit card. So means what? Means your company, when you accept credit card, means you sell receivables to credit card company immediately. So credit card company ask first bank, remember that's the factor. Credit card company. Nothing for free. They want to do a dirty job for you. So they ask commission. How much? 3%. So they ask for the commission 3%. Okay. So totally the same as selling of accounts receivable. So how much? 3%. 3% should be $180, right? So 3% should be $180. Are you done already? So 3% based on accounts receivable $6,000, 3%, $180. So your company net store, you got the cash after 3%. Also, you have a commission 3%. At the same time, don't forget, you sell the product to customers, right? So you have sales revenue. Here, don't forget, why sales revenue? Because sales revenue increase because you sold products to customers. So you earn the revenue, $6,000, right? But don't forget, at the same time, you sold receivables to credit card company. So at the same time, you sold accounts receivables to credit card company, to Vector. And paid 3% commission. Okay, so you did two things at the same time. You sold products to customers, but you accept credit card, which means at the same time you sold receivables to credit card company. Okay, any questions? If you don't have any questions, then we've done the third issue already. You sell accounts receivables to factor, to bank, finance company, credit card company. So we actually we have a practice on your note, page 29 and 30. Page 29, you can go to your note, page 29. Page 29, we talk about the first case. You sold receivables to factor directly. That's on your page 29. Page 30, we talk about credit card, this case. Page 30, we talk about credit card, this case. Okay? But we don't have much time. I think it's quite simple for you guys, right? So leave it as your homework. You practice at home. Next week, I check it. Give you extra point. Okay? It's okay for you guys? Page 29 and page 30. That's your homework. Okay? Practice at your home. And let me check next week. I give you extra point. Okay. So if you don't have any questions, we've done for accounts receivables. So for accounts receivables, we've done already. Since the first issue, second issue, and third issue. So here, for accounts receivables, at the beginning, when you sell the inventory, what should we do? Don't forget, next Monday, we have a review test, right? For your first issue about receivable. Second issue, on the last day, when we are going to prepare financial statements, how to report our accounts receivables on financial statements, we've done already. Third issue, we sell accounts receivables to factor, financial company, credit card companies. Okay, we've done 3 issues already for accounts receivables. Right now, we talk about notes receivables. When we write down the note on your slide 105, slide 105, also the same, recognize, value, dispose, recognize, recall the transaction when it happened. 认列 recognize. Remember? Value 评价 how to report the receivables on financial statements. Dispose, could we sell our notes receivable? Of course, yes. So dispose 处置 sold receivables. So you will find out also we talk about these 3 major issues, but we focus on notes receivables right now. Actually, most of things are the same. Only 2 things different. Others totally the same. So we focus on notes receivable right now. So what's a notes receivable? We write down the written promise, right? We want to give them more guarantees. So you write down the written promise to give them more guarantees. To promise when we are going to pay the money back, right? So we will write down the promise on the note. The note is the contract, 合约. So you have to keep your promise. Why is that? Because when you broke your promise, they could sue you. So maybe you have some problems. Okay? So what's the major reason we have a notes receivable? What's the major reason we have accounts receivable? Accounts receivable. major reason we have is we sell the products to customers. So customer owe you money. That's why we have an oral promise accounts receivable. How about notes? Usually, because when you lend the money to someone else, you ask for more guarantees. That's why we have notes receivables. Okay, so the major reason we have a notes receivable is when you lend the money to someone else. So it's about lend or borrow money, 借贷关系. That's a major reason. Okay, and usually notes receivable, do we have an interest? Yes. So when you find out it's not receivable, don't forget you have to consider interest, 利息. Okay? What else? Even though I know the major reason is lend, borrow money, 借贷关系, still we have other reasons. What is that? When you do the business with customers, but the amount is too big. So the amount is too big. Also, credit term means what? How long usually you ask customer pay the money back? How long? You ask customer pay the money back usually 2 or 3 months. But for this business, you give them more time. So credit term 信用期间宽限期间 you give them more time. Like what? Okay, you pay the money back after 6 months, after 1 year. Because of that, you think it's too risky. You ask for more guarantee. For that case, you ask for more guarantee. So that's why you ask customer write down the promise. Okay? So the amount too big. Credit terms 宽限期间 Credit term is longer. So you think it's more risky. More risky, that's why you ask them to give it more guarantee. Okay? What else? Oral promise from customer, right? But today, customer cannot pay the money back. They ask you to give them more time. Do you trust them? No, you don't trust them anymore. Because since they cannot pay the money back today, would you expect they will pay the money back in the future? You think it's risky. Again, since it's risky, you ask more guarantee. So how? You ask them to give you written promise note. So they use written promise to replace oral promise. Okay? So the third is you ask customer to use written promise replace oral promise. So use written promise, replace oral promise. You want more guarantee. So did you find out either one? You want more guarantee. That's why you ask written promise. Okay, any questions? No problem. So when you want more guarantee, you will ask written promise. That's why you got notes receivables. So let's look at the details on the note. So what's the detail? First, did you find out the number here? $1,000. At the right corner here, there $1,000. What's that? It's principal, 本金. How much money they have to pay back in the future. So this is principal. 本金 they have to pay back in the future. Principal, 本金 how much they have to pay back in the future. How long they have to pay the money back? Here told you after 2 months. So date due 到期日. When is the deadline? They have to pay the money back. Maturity date 到期日. Okay? After 2 months. After 2 months, which date? So you should tell them which day they write down the note. So here told you May 1st, 2020. May 1st, 2020 is the date they write down the note. Issue date 发行日. So this is the first date. Okay? And did you find out who signed the name? Who signed the name? Maker. So who's the maker? Who made the promise? So maker is who made the promise. 承诺的人。Usually, who made the note, who have to sign the name, right? So, who made the promise? This company made the promise. Who is going to receive the cash? In the middle of the note, told you. This one. Who will receive the cash? Okay? For the note, don't forget, not only pay the money back, what else? Interest. Nothing for free. Interest. So here told you 12% interest rate. So on the note, you should promise how much money you are going to pay for the interest. So here, the interest rate. But you know, usually interest rate, we express it as annual, 1 year. Annual, 1 year. So it's annual interest rate, 年利率。So did you find out? Made a promise. You have so many things you have to write down on the note and make sure you keep the promise. Okay? Could you tell me who, which guy, the note for them is not receivable? For another company is not payable. So not receivable to which company? Not payable to which company? Could you tell me? For the company pay, who will receive the cash? For them, the note is not payable or not receivable. Anyone? Janet. For the person who will receive the cash in the future. So for Wilma, that's their right, right? They have the right to get a cash in the future. So of course, that's their not receivable. Okay? So pay for Wilma, that's their not receivable. So for whom? That's their not payable. Of course, the person, the company made the promise. They wrote the note. They wrote the note, right? So for the maker, of course, because they made the promise. What kind of promise? They made a promise that they will pay the money back, right? So of course, this they are not payable because this their obligation to pay the money back. Okay, any questions? No problem. So you should understand how to read the information on the note. All the things, there's a promise. So have to make sure you keep the promise. Okay. So if you don't have any questions, $1,000 is the principal. So what's the principal? The amount you promise to pay in the future. The amount you have to pay in the future. So that's principal. We've mentioned already, right? So principal, that's the amount promised to pay in the future. So issue date is what? The date you write down the note. So that's your issue date. Issue date. 开票日，发行日。Okay, maturity date. The date you have to pay the money back. 到期日。Interest. Usually we express it in 1 year. Usually we express it in 1 year. So we call it annual interest rate, 年利率. Okay? Annual interest rate, 年利率. So the interest rate for 1 year. Also, here, contractual interest rate. Remember, the interest rate on the note. So this is your contractual interest rate, 12%. So annual interest rate, also that's your contractual interest rate, 票面利率. Interest rate on the note, that's your contractual interest rate, 票面利率. Why? I repeat it a couple times. Because for your chapter 11, we have a second kind of interest rate. So in your chapter 11, I will tell you second interest rate. So you should remember contractual interest rate. Contractual interest rate is interest rate on your note. So when you write down a note, this is the note. If we write down the note, if we write down the interest rate on the note, 12%, for example, so you can find out the interest rate on your note. This is your contractual interest rate, 票面利率. Also, this is your annual interest rate. Annual means 1 year. Contractual means on your note. So that 12% is your contractual interest rate. Also is your annual interest rate, both.票面利率 contractual interest rate. Okay? Any questions? No? Okay, if you don't have any questions, so we find out all the informations on the notes already. Right now, I've mentioned for notes receivable, accounts receivable, actually model accounting methods, they are the same. But two additional things you have to do when we talk about notes receivable. So two additional things you have to do is what? First is determine maturity date. Which date is our last day we have to pay the money back? Also, it's only for notes, right? Interest. Accounts receivables, we don't have interest. So accounts receivables, we don't need to consider interest. But note, always, we have the interest. So don't forget about the interest when we talk about note. Okay? So two additional things we have to talk about when we consider notes is maturity date and the interest. Okay? So maturity date is quite simple. You just find out which day is the last day, which day is the deadline. So we have three situations to ask. They pay the money back. On demand means pay the money back today, right now, on demand. So for on demand, which date they have to pay the money back? Today, right now. So which day is the maturity date deadline? Today, right now. On the stated date, you will give them specific date. Tell them like what? Okay, please pay the money back. Tell them the date directly. Okay, pay the money back on April 1st. Or pay the money back on June 10th. So you will give them the specific date. So based on that case, do you need to determine maturity date? Do you need to do the math by yourself? You don't need to. So on demand means right now, today. So for the third case, you have to calculate, determine maturity date by yourself. We just tell you stated period time. Stated period time is like, pay the money back after 2 months, pay the money back after 1 year. So 2 months, which date? 1 year, which date? You have to determine it by yourself. So for example, please pay the money back after 2 months. 2 months, which date? After 10 days. 10 days, which date? So you have to calculate, determine material date by yourself. So for the third cases, you have to find out which date. Okay, any questions? So let's see how to find out the maturity date. So for example, on slide 114, if we tell you, please pay the money back after 3 months, use the months as expression. So please pay the money back after 3 months. Then 3 months, which date? If today is May 1st, so the same date after 3 months should be August 1st, right? May 1st, May, June, July, August. So same date after 3 months. If I told you please pay the money back after 2 months, so which date? Same date after 2 months. But the problem is September. Do you have a 31st? You don't have. So you just choose the last day. Okay? So same date after 3 months. Same date after 2 months. Okay? How about when we use days? Then you just count it each day, day by days. So, but remember, even though you count the exact days, you should remember, skip first day, include last day. Skip first day, include last day. Okay? So for example, if I told you, today is May 1st. So since for May 1st, after 10 days, could you tell me which day? Skip May 1st. So you should start from 2, 3, 4, 5, 6, 7, 8, 9. 11. Okay? Skip first day, include last day. So 1, 2, 3, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Any questions? So that's how we find out maturity day and last day. No problem? Okay, so this is the first issue. You have to do your math by yourself when we talk about notes. Notes, find out maturity date. Also, second thing is what? Calculate interest by yourself, because notes always you have to consider about interest. So let's look at slide 117. Remember how to get the interest? Interest is the principal times annual interest rate. But you should understand, principal times annual interest rate, you got the interest for how long? I try to compute interest and use face value of note. Face value of note means the number on your note means your principal. So face value of the note is the principal, 本金。Face value of note is your principal, 本金。So use principal times annual interest rate. You should understand annual interest rate for how long? For 1 year. So when you use principal times annual interest rate, you got the interest for 1 year. But you should understand, when someone owe you money, it's not always 1 year, right? So you have to consider what? Time, how long they owe you money. That's why you still have to times how long they owe you money. Okay? So time in terms of 1 year, you consider how long they owe you money. So this one, consider how long they owe you money. Okay? Any questions? So if you don't have any questions, so we have three cases. First case is what? $730 is the principal. 12% is the annual interest rate. How long they owe you money? 120 days. Okay? So use principal times 12%. You got the interest for how long? For 1 year. But you know, not always they owe you money 1 year, right? So you have to consider how long they owe you money. 120 days only. So 120 days. 1 year, we assume 360 days. We assume 360 days for 1 year. So this means 360 days is 1 year. Okay? So after consider how long they owe you money, you will get the interest they have to pay you, $29.2. Okay? Second case, they owe the principal $1,000. They have to pay you $1,000. Annual interest rate 9%. They owe you money only 6 months. So you have to consider the time only 6 months. That's why $1,000 times 9% is for 1 year. Okay? They owe you money only 6 months. So that 12 means 12 months for 1 year. So 12 means 12 months means 1 year. Okay? So after consider how long they owe you money, they need to pay the interest. It's only $45. Any questions? So that's how we calculate interest. Always don't forget about how long they owe you money. Okay, if you don't have any questions, let's take a break.